I bought my first shares in 1991. They were NAB shares, and unbelievably, I still got them. I've still got the same as I bought back then. I've sold everything else multiple times, but I've kept them. I used to go with ANZ stockbroking, and he would tell me what to buy, and I'd buy them. Yeah, did okay sometimes, other times, not so good. But I said to him one day, I've heard this thing about technical analysis. And he said, no, it's just rubbish. Just don't worry about it. And in those days, not many people knew about it. It was like black magic. Anyway, I was in a group, and basically it was fundamental analysis. And a guy came along one day, and he said he used technical analysis. And I said to him, look, can you show us what it all means? So next meeting, we met in this guy's office. He owned a company, and we met in his boardroom, and he had a whiteboard, and he got up. He said, there's only three ways a share can go. It can go sideways, it can go up, or it can go down. They're the only three things it can do. And he drew the Weinstein, phases. He said, this is phase 1, this is phase 2, this is phase 3, this is phase 4. He said, you want to buy when it's in phase 2 and sell it when it goes into phase 4. He said, that's it. If you just look at this, let's look at the chart. If it's going up, buy it. If it's not, just go to the next one. I thought, that sounds pretty easy. Wonder what the problem was. That was how I started with technical analysis. So, and I've gone through many things over the years, and I've had a lot of success, but I've had a lot of failures too. And to be honest, I always thought there was some secret thing that other people knew that I didn't. And I could never get anyone to ever explain what that secret was. I'd get a strategy. I'd read about a strategy. I'd try it. It would work. I'd say, this is fantastic. And then it wouldn't work. So if it doesn't work, I'd throw it out and I'd do something else. I can't tell you how many strategies I've done over the years, probably hundreds. It wasn't until I did your course that I realised what the problems were. It wasn't that strategy was no good just because it started to have failures, because that's what they all do. And if you don't realise that, you just throw them out and you try something else. Anyway, that's how I got started. Anyway, not making money. And you're right. You got to define what you mean by that. I'll give you a classic example. This was good. I'll buy this. It would go up, and I would say, yeah, this is a good trade. Then it would go down, and it would go into a loss, right? I'd say, oh, this is no good. It would then go up again into profit again. To say, right, this is it, I'm out. I'd go out, and then when I look back a couple of months later, it never, ever went back into loss again. It just kept on climbing, and it would have reached the target. And I see that over and over again. So my definition of failing was not taking off like a rocket and going straight up to the target. If it ever had any pullback, to me, that would be a failure. And when you look at it, it's crazy because they all do that. You've got to expect that as it takes off. You've got to expect it to pull back. In fact, that's a sign of strength. It's pulling back a bit, then it's going higher. Yeah, so that's what would be my definition of failure, not having immediate success. For years, I used to make a good profit, and then for some reason, it stopped, and I thought it was something I was doing. But I believe you've got to expect those years when you don't make a profit. When you have a couple of bad years, you start to question everything you're doing, and you think, should I actually continue on with it? It just doesn't seem worth it. The book Trading in the Zone, I've actually read it 4 times. And I'll tell you what I've done. In around 2010, I bought the book as part of all the books I've got, and I read it. It was okay. It was a good book, had a lot of good stuff in it. But I read it and I put it back on the shelf. When I first joined Share Wealth Systems, you recommended reading that book, so I got it off the shelf and I reread it, right? And okay, it's got a lot of good stuff in it, but there was no real impact, right? Then when I did the course, you've got to read the book, to do the course. So I reread it again with the course. I did all the videos and I made the notes and I did all the quizzes. And I thought, oh yeah, this is good. I think I'm getting somewhere. And I always redo a course. If I ever do something, I always redo it again to reinforce. So I redid it again. And I reread the book again, and it was really good, right? It was good. But to be honest, I didn't have any mind-changing experience. I didn't really, I learned a lot of things that I didn't really know, and that it wasn't until I did it for the third time, I reread the book again, and suddenly that road to Damascus moment, when I suddenly realised that the person you were talking about, and they were talking about in the book, was me. And I was doing all these things, and I'd never realised it before. I said to myself, that's me doing all that. And that was when I suddenly realised what the answer was. I wasn't accepting the risk, that was the main thing, but there were many other things. I suddenly saw myself in that book and in that course as making all those mistakes, which I didn't really know I was doing. Once I realised that, the problem ceased to exist, because once you understand what you're doing wrong, well, then you can, and why you're doing it, you can solve it then. It's sort of solved in a heartbeat. And since then, I've really been a confident, happy person. I used to get up in the middle of the night to come in and see how my trades were going on the US market. And now I can get up in the morning and do a few other things, and then, I better have a look and go and have a look. So it's made a real world of difference.
Road to Damascus moment, and you say in a heartbeat, but how many hours of get to that point, that enlightened point, if you like, that enlightened moment, that heartbeat went into that heartbeat. It's amazing how we as human beings, somehow whatever it is in our subconscious blocks that stuff going into that level of understanding, almost like mastery, until we get there. What is it that's blocking us to get to that? It's amazing how that happens.
A phrase that says, I know what to do and I do what I know. And a lot of times I would think, should I make this decision? Should I sell this? Buying's easy. Anyone can buy, but selling is the hard part. When do you close it out? Now, you might be closing it at a big profit, or you might be closing it out at a loss. But that has really helped me, because I say to myself, I know what to do and I do what I know. So if I know that this trade is now over, then I sell it. And if I've made a big profit and it goes on higher, I say, well, look, that doesn't matter. That was my plan to do. I'm happy with that, and I'll move on to something else. I won't beat myself up over missing out on extra profit. Or the way I see taking losses is, I take the loss, but what the capital I get back, I put it into another trade, and I make that loss up. And why stay in a losing trade and losing more and beating yourself up? So now I've got the confidence just to go ahead and do it. It was a good idea of yours to put Atomic Habits into the mix too. I always like to tell people I was the first person in Australia to buy Atomic Habits, because I was on my computer maybe about 2 a.m. or something, and this email came in, and it was from the author to say he'd just written this book, and it was up for pre-release. And he said, this is how they gauge a bestseller, not on how many books it sells, but how many books. I hit the reply button straight away within about a minute of me receiving it. So I like to say I was the first person in Australia to ever buy Atomic Habits. And I reckon it was fantastic. I read it cover to cover, and I ordered the diary that they had too. It was a good idea putting James Clear into the mix too. I would have so many things to look at, I have to tick so many boxes, that it would be, in the end, I would just say, it's too hard. I would look back later and I'd say, no, this didn't work out because I missed out on this particular box. I didn't tick that one. So what I do now is I just have a few boxes to tick. And if they tick, then I take it. It's like, I've back tested my system. It's based on sound logic. It's worked out very well in back tests. I've gone back in time and searched for the criteria, and then seen what's happened. And I'm confident that it works. It doesn't work every time, of course, but I'm confident that over the long term, it is a successful and profitable and low risk strategy. And so now, when I've got a slot to fill, I just look for the criteria, and when I see it, I just buy it. And the same with closing too. I've got the closing criteria, either at a target or a stop loss. Then I take it without looking over my shoulder to say, am I doing the right thing? And if it doesn't work out, well, that's just part of the game. And it has made a big difference because I've felt that when I've done what I know I should have done, it generally works out. I'm always happy with it, but generally it's been the right decision. When I've looked back at my post-mortem, it's been the right decision. So the few times it hasn't, well, that's just part of the game. It's just accepting that it's going to be right all the time. I've had people say to me about themselves, I need to get a 10-bagger. If I do what you say, I won't get a 10-bagger. So, yeah, but how many times in your life are you going to get a 10-bagger? How many times? Just try for one bagger, right? Do the one baggers. If you get plenty of them, need the 10-baggers, but become profitable first. Don't be a loser. Yeah, losing while you're trying to get the 10-bagger. Their expectations are too high. Yeah, you've got to have high expectations, but you'd rather have the expectation to say, I'm going to become profitable, I'm going to be happy with what I'm doing, rather than be unhappy, always searching for that strategy that's going to make you $1 million in a year or something like that.
Yeah, it is, isn't it? I mean, those people aren't thinking in probabilities, are they? They're thinking about the big home run, and and if there's so many analogies, baseball, laugh, whatever, but they want to get to the big dopamine hit, the big feel from the big hit, and whereas thinking in probabilities is more, it's more the torture strategy. I'm going to be profitable overall, but built into my profit are going to be lots of 1, 2, and 3 baggers, and 0.5 baggers and 0.2 baggers, and they're going to be losses as well. But the average loss is going to be smaller than the average profit. The average profit trade, and my percentage win rate, which is the combination of those two, is my edge. Is over time I'm going to be profitable to a degree that I'm going to be peaceful with.
Yeah, so I picked it up almost straight away, but I've got the list, trading in the zone rules. I've got them written out. And what I've actually done, I know this sounds crazy, I'm continually watching them, looking at them, thinking, am I doing this? This morning, I looked at one that said, I've got to make on the charts that I save, I've got to put more notes on so that what I was thinking at the time when I did things. Because later on I think, what was I thinking when I did that? That seems a crazy thing to do. So I made a note that I've got to start putting more notes on the charts when I save them. So when I go back, I can understand what was I thinking and was I in the right frame of mind when I did that. So it's like a process that never ends. You can't just say, oh, I've achieved that. You've always got to keep on top of it, keep refreshing yourself. I've got big plans. The GFC, I lost too much money before I finally woke up what was happening. I just it kept going down month after month. I kept saying, this can't go on. But it could go on. And it went on for years. And I lost so much money till I finally woke up and I sold everything. And eventually it all came good and I went back in. So I'm not going to let that happen again. I'm keeping an eye out for the signs at the top is close, and I've got the plans made for hedging, for the conservative stocks that are going to bring an income in to live on. Go to cash and just conserve. No, we haven't got any debts, but if you've got debts, you've got to rein them in. And because when the exuberance starts, people are just going to go crazy, and they're going to say this is going to go on forever. And the new money's going to come in because people are going to say, people that never been in the market are going to see everyone making money and say, it's like Bitcoin. People that haven't got a clue what Bitcoin is, they see other people making money, say, oh, I'll be into that. Then there'll be a flood of new money coming in. People will be mortgaging their homes and going into margin loans, and you know what I mean. It'll just be crazy stuff. But people will think it's normal, and that's my plans anyway. To make as much money safely until the top, and then to go into like a bear goes into his cave.